Welcome to readtheticker.com. Today we're going to try to explain Richard Wyckoff's understanding of technically strong and technically weak stock position. Quickly, a technically strong stock sees the demand or buying power building. It's like a coiled spring ready to explode. Now, technically weak stock is where you can see the supply power or the selling power building. So it's in the inverse of the buying power. This is the definition in the rising market. Obviously, you can tweak it for a falling market. But on a technically strong stock, after a period of selling, the weak hands selling supply has dried up. Shorts have actually acquired a positive position. Therefore, if the market goes against them, we've got to buy to cover. So that's more buying power. The informed believe the stock is going to go higher, so they've been accumulating and tempering the falling of the stock. And eventually the stock forms a tightness or springboard position before it explodes higher. A technically weak stock in a rising market is when shorts are building up a position in line for a falling market. The informed are actually distributing acquired stock float they acquired from a lower level. The less informed are coming late to the party. They're the weak hands. They're buying late in the move and they're more likely doing it with margin. Stock is near a climactic move and the wide ranges are appearing, so it's moving up rather fast just to get the publicans, so the informed can sell to them at a higher price. Let's have a look at a couple of examples. Now just have a look between these two blue vertical bars here. This is a symbol called SBUX or Starbucks, I think it is. Yeah, Starbucks. Just a real quick example. We've got two very strong up moves here, right? Good volume. So that'll create a spark in the news. Market what you say. Starbucks breaks into new highs. Blah 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 prices. But all that volume is just attracting short selling. And really, the technical strength comes in later here, when the selling dries up. You can see if the buying power was strong, and the selling was light here. As you can see down with these the volume wave I've got down here, strong up wave. But really, all this volume between here and here didn't produce any new lows. Didn't take out the low where it started from. So that's where the technical strength comes in. So just hang on a second. The red bar points to technical weakness, and the up bars point to technical strength, or the up arrow, I should say. So that's a quick, short example. So let's have a look at a wider range. Here, I draw a support and resistance in the range. Here we have, where's my vertical bar? Here we have, I would call that technical weakness. Here we have lots of volume. Volume rising, it actually gets a bit climactic about here. Right, lots of volume, makes it to new highs. Well, not too much in the wide ranging, but lots of volume showing where price action is going nowhere. Just runs out of gas, the momentum dries up. Something happens to the market and some selling comes down. So we actually have our the weak hands begin to sell between here and here. Okay. See the increase in volume and the downswing, so people are selling. But we don't really see the dry up and selling until about, probably about here, sorry. See these bars here? See how the volume drops off dramatically? So the volume is actually quite high here. And all the selling dries up. You can see it's been acquired because all that extra volume here, you don't see any new low prices. So the informed are buying this. You have lots of volume, and another second punch down to see if any selling's around, and eventually the selling dries up. You see this, all the selling in this last hurrah here. So I'll draw different arrows. Selling, 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 and some selling around here. As you can see in these rows, down arrows. This is the initial hurrah in selling. The weak hand's given up. And there's some more selling going here, but as you can see, it's pretty much the last hurrah because it doesn't really do any damage. So the informed are buying and accumulating the stock. And then the buyers are saying, well, let's see if there's any more selling around. And as you can see, that pretty much dries up around here. Then they slowly accelerate the price higher because they don't really want to have a lot of people jump on. People have seen this selling here. They don't want to have people jump on too quick. But it actually goes up too fast. As you can see, it rises up to resistance. They stop buying and they actually bring on a bit of selling down here. But sorry, if you can see between this pattern here, the volume actually picks up. A lot of volume in this down wave here, but it doesn't really go anywhere. So that's a really strong accumulation. They get a bit of a spring here and accelerates above resistance. But this telltale sign here shows dullness. Look at that, this dries up, nothing going on. Yes, it is around January. Oh, that's right, January the 1st. So the volume does dry up. But there's no forced selling, no one's in a rush to sell. When the market comes back on, there's no real damage done here. Whoops. Just click to the side, clear that. And we are ready to break resistance. So here, and quite frankly, this little pattern here would be considered a springboard. Price has moved up to resistance. A bit of shorts try to push it down. It dries up. The demand jumps back in and soaks it all up. Even after a period of January where the shorts really could have attacked if they wanted to, because obviously people are away on holiday and everything. So quite frankly, that's the springboard. A bit of tightness on that last blue bar here before it shoots through and it obviously carries on up. So that's a stock for showing off a very strong technical position. And as you can see, as it goes higher, the shorts are attracted to higher prices to take on building short positions. Where are we? Okay. So once again, when price is making new highs and the market is stock is in the news with breaking new highs, volume goes up, effort versus results, lots of effort but it's going nowhere. Shorts are actually accumulating a short position, force prices down, so that's actually selling power building up because the informed who purchased down here are selling up here, and so shorts building up a position. And after a period of selling, the informed start to accumulate, and they start accumulating, and when the selling is dried up, they mark prices higher, and if at all possible, they have another go at accumulating stock flow. Because, for example, here we have lots of volume, but it's not going anywhere. So the people there, some shorts are having a go, but the demand's too strong. And then before we head out to new highs, breaking resistance, we get the springboard action here. Bit of tightness at the end, and it's launched into new price range. So that's a good example of identifying technically strong and technically weak positions in a stock, in this particular case at Starbucks. Thanks for watching.